Welcome to Street Smart Investing. Today is Sunday, May 17th of the year 2020. This is part 2 of the video of the coronavirus stocks. The reason this is part 2, this is the Indirect Therapies video of the coronavirus stocks. As you can see here, there's only 2 stocks, so this should be done pretty fast. So first up is Regeneron Indirect Therapy. The price is it's pretty high, as you can see. For today's price is at $576.72. Market cap is 64.89 billion. If you want to round it off, pretty much 65 billion. I like rounding things off when they're just so close to the number. So, if it was like 0.6 or something, then I'll keep it at the half. But yeah, it's pretty high for that price. Okay. So the earnings per share is at $19.90. The PE ratio is at close to 29, which is really, really good. Like that, I haven't seen a high PE ratio that high in a while, with everything pretty much going good on all cylinders. Pretty much their cash flows they're on top of their cash flow. They're doing pretty good. With debt, the cash flow is good, the trend is good, PE is good, really, really high. The reason I don't watch list this is because this one, Regeneron, is because it's just too pricey. Way too pricey for me, out of my limit. But, it is a good company. That's all I can say. I'm not recommending it. All I can say is that Regeneron, based on the financials that I've seen, they're a really, really good company. Even though they don't offer the dividend and dividend yield, this is a company I bet in a few years they're going to do really, really well. So again, the PE is at close to 29. No dividend yield. The 1-year trend is strongly upwards. The cash flow is at 148 million. The debt is only 23%. That's fairly low compared to others that I've seen. So they could definitely take a hit, probably until the end of the year, I'd say, definitely. The analyst ratings that I've seen, it is a 54% buy, 46% hold, and a 0% sell. I guess people are holding off just because in case the stock market crashes again, they can get it at a cheaper rate, which I don't blame them. And they've got a lot of work to do. Even if they are not successful with the indirect therapy, I'm sure they'll find some success. Next up is Roche Orochy. I don't know how to exactly pronounce it, but the second company is pronounced ROCHE. That is the ticker symbol. RHHBY is the symbol. Again, this is the second indirect therapy company that's working on the coronavirus. What's a little tricky about this company, it is trading on the OTC market, meaning over-the-counter. The over-the-counter market, I'll explain that after I just go over the numbers, and then we'll come back to it. So I'll just skip that for now and continue. So the price of this is at $45.61. Market cap is at 312.25 billion. So 312 billion. Earnings per share is at 2. That's pretty low. PE ratio is at 22, which is pretty good. Dividend is at 1.13, so $1.13 throughout the whole year. And then dividend yield percentage is at 2.5 or 2.49% if you want to be exact. The 1-year trend, it kind of went up and then it kind of squiggled down and kind of went sideways here again, and then went up and sideways. So um, it came back to the that line over there. So it broke out of that line. So obviously it's going up pretty strong. The cash flow is at 440 million. So this company can definitely take a hit if things go bad. The debt is at 57.54. Not too bad, but just not bad. That's all. So analyst ratings, I see it as this is what they have. Again, I'm not recommending these stocks, but just giving a review and just giving in my opinion and perspective on this. If you're gonna invest, again, do your own due diligence, and whether you win or lose in the stock market is based on your decision. I'm just giving my insight. So again, the analyst rating, I see they had 100% buy, 0% hold, and 0% sell. So it looks like a lot of rich people are going to be buying this stock. So that's pretty much it. Now, let me just explain the OTC market. The OTC stands for over-the-counter market. So, for example, when you go to, like, let's say Walmart or an actual store and you buy something, you're buying something over the counter. So pretty much when you're buying, you go to the cash register and whatever, and then you're buying from the cash register. So basically you're buying from that person. There's no person in the middle. There's no third party. There's no like witness there or whatever. So with over the counter is basically a direct consumer purchase, and basically the holder of those stocks or the company that you're getting it from or whatever, or whoever you're getting it from, it's a direct purchase from that person. It's not like listed. I mean, it can be on the stock market, but again, it's a over the counter. It's just purchased a different way. Again, because there's no third party. And basically, again, you're buying direct from that person. So with that said, there's a few things that are bad about it, because you might be paying a little bit over the price instead of the market pricing it, and it might be harder for you to sell. So those are the only two things to worry about. So other than that, these are the stocks, and I hope you enjoyed the video. Thanks for watching.